Hi folks, how you doing today? Wanted to make a quick video regarding Chapter 22 tax return. Okay, it's not overly difficult, but I wanted to show you a little bit about it. Last tax return for the semester, we only got, I don't know, a couple weeks left to go. When's the thing? I think what, 2 weeks left in the term. Anyway, this is the last one, and I wanted to make the video, and I'm going to make it due at the end of next week, so it'll wind up being due on the 27th. Also, to let you know, I don't. I decided to make this one optional because it's coming a little late. So anyway, I would suggest doing it. I'll drop your lowest tax return score, or if all your tax returns were good, I'll use it to replace a low homework score or something like that, just in case. Okay, so anyway, you can do it or you could skip it, whichever you want, but I thought I'd make a quick video to go through it. Okay, all right, so this first one here talks about Julio and Melania. They're owners of the Falcon Corporation. Now it's an S Corp. Okay, each one owns 50%, and they receive distributions each of $15,000. Now the thing, what you really need to know about this is an S corporation is a pass-through, and as a pass-through, you issue what's called a K1 because there's some separately stated items. So anyway, they give you sales revenue, income, distributions, and all that information here. Okay, so again, I would recommend, doing this. I would take all this information right here, and I'd copy it, put it on a sheet of paper, print it out or whatever. I think it'd be much easier to work the problem. Okay. All right, so let's go take a look at the problem itself. Okay. So the first thing they ask you to do, it says, what amount of ordinary income and separately stated items are allocated in year one they ask, based on the information above, and assume that Falcons Corporation had $200,000 in qualified property. Okay. So separately stated items. Now these guys are 50-50 partners. So this is relatively simple. If you take a look, here's the ordinary income. And because they're 50-50, half goes to Julio and half goes to Melania. Same thing for Section 179. Same thing for qualified business income for all of the items. Okay, so they're separately stated. Because remember, as a pass-through, this corporation doesn't pay tax. It gets passed through to the owner's 1040 via the K1, and then it becomes taxed at the individual level. Okay, so that's the first part. Okay. Now the second part of this, okay, on the second part they ask you to prepare the K1. So you could take a look at this and do it, but notice here's the ordinary business income. Then they have some Section 179 deduction, right? Then they have tax exempt interest, then distributions, and then down here the reconciliation. And all you need to do is read what it says on the lines right here, and you'll get that number. Okay. Okay. So this is K1 information here. Okay. And I think the next one they're going to ask you to do one of the K1s. I think. Let's see. No, now they want you to do the 1120S, and they give you some information here. It says complete Julio's 1120S, schedule K1 for the year. Okay, so this is now Julio's K1. So the K1 is when their portion of the shareholder income and separately stated items come over. Okay, so you can see here's the corporate thing, Falcon Corporation. This is shareholder's name, just put in Julio. And again, they get 50%. So all of those items they showed you, ordinary business income, $93,500, that's 50%. Items affecting shareholder basis, $750 and $15,000. This was a distribution. I don't remember what that is. That might be, I don't remember what that item was. But anyway, just take a look. So this is what, basically, I just wanted you to take a look and see what a K1 looks like, what it's all about. Some of you that, maybe have a job right now or an internship have already seen these, but I think probably there's quite a few folks that haven't. Okay? Especially during tax season, you would be seeing this. Okay? All right, now that's the first one. The next one is kind of similar, a little bit more complicated. That's why I wanted to make the video. So here, they have these two classmates. They have a professional cake decorating item, good to eat. And they give you a bunch of information here. It says they formed the beginning, each contributed $50,000 each in exchange for 50% ownership. So this is their basis, right? They borrowed $200,000, personally guarantee the loan. So anyway, they give you a bunch of information here. Now let's take a look at what they want you to do with it. Okay, it says assume they formed an S corporation and they want you to do the 1120. Okay, so calendar year 2024, name of the company, employer identification number, date incorporated, gross receipts or sales 450,000. Well, where did they get that from? It's got to be in here somewhere. You can't just make it up. Yep, 450,000. Then cost of goods sold, again, in the information there. So just follow along with these items. Compensation of officers. Well, where did they get that from? Well, let's see, $60,000 compensation to officers. Up. 30,000 to James, 30,000 to Paul. Okay, so you can go through here and take a look. Salaries, these are for the other people here. Anyway, just go down through. Again, I just wanted you to, and so their ordinary business income at the end of the day was $85,000. Okay, that's the first part. Okay, then here's the Schedule K part that goes along with it. All right, let's take a look at number 5. All right. Now they want you to do Paul's 1120. Again, remember, they made it pretty simple for you because it's 50%. So what you should do here is just to make sure you understand what's going on. Take a look. Like here it says ordinary dividends. Half of it's 500. Just make sure you can go back here. And let's see, where's the talk about dividends? Okay, here you go. They get $100 of qualified dividends, so half each, right? Then over here, short-term capital gain, $750. Where did that come from? Okay, right here. Short-term capital gain. Remember, 50-50 folks here. Okay, not too difficult, but I thought I'd make it a little easy on you since it's the last one. And then let's see what they want to do here. All right, this is a little bit more challenging. They want to know, compute the tax basis for Paul's stock. So take a look here. So how you compute basis, this was the beginning basis. This is how much they invested. Then, so they want to know how much is Paul worth as far as this GTE, good to eat is. They had ordinary business income of 42.5, qualified dividend of 5, capital gain of 750. Then they had a charitable contribution of 2,500. It was $5,000, 50 each. And then they took a distribution. Now distributions go against your investments. Okay. Next question says, what's the yearly basis? Next one, what's Paul's income? So it says, what amount of Paul's income is subject to FICA? Just his salary is subject to FICA. The other is self-employment income. What about the gain? What about the next one says, what amount of income, including his character, will Paul recognize on the $20,000 distribution he receives? Well, the $20,000 distribution is return of capital, basically return of basis. So there's no gain because he's simply returning money that he invested. That part of that $50,000 initial investment, that's what it's considered, so long as you have basis. Okay? And then finally, they ask you, what amount of tax does GTE pay on the dividend? The answer is none. And the reason why, because it's a pass-through, the company does not pay anything. It passes through to the owner. Anyway, folks, that's it for the last few tax return items. You can follow through this. Shouldn't take you too long. Just take a moment to read through the items and so that you can kind of follow through. All right, folks, that's it. We're down to the last nitty-gritty. Got any questions or if you need additional help, please feel free to be in touch. Talk to you soon.